Good afternoon, everyone. Welcome you all. On behalf of KSH International Ltd and the book running lead managers to the issue, I would like to welcome you all to this press conference. Let me first introduce you to the dignitaries from the company. So we have Mr. Rajesh Hegde, promoter and managing director of the company. Next to him, we have Mr. Amod Joshi, chief financial officer of the company. And next to him, we have Mr. Dhruv Chopra, head of the investor relations at KSH International. Now, coming to KSH, it is India's largest exporter of magnet winding wires with a global presence across 24 countries, including countries like USA, UAE, Romania, Saudi Arabia, Kuwait, Germany, etc. etc. KSH is the third largest manufacturer of magnet winding wire in terms of capacity, and it has delivered highest EBITDA margins and revenue growth amongst the magnet winding wire peers over the last 2 years. In terms of revenue, it has grown at a CAGR of 35.5%. Their EBITDA has grown at a CAGR of 56.7%, and PAT has grown at a CAGR of 59.8%. KSH is manufacturing various types of standard and specialized magnet winding wires, and some of the key and critical products are continuously transposed conductors, which is CTC, rectangular enameled copper/aluminium winding wires, bunch paper insulated winding wires. Over the last couple of years, KSH has built 4 large strategically located manufacturing facilities with a focus on advanced technologies and new product and process development, and wherein they have developed some very specialized magnet winding wires which are tailored to customer specific requirements and are being used across the capital goods as a critical component. And some of these capital goods are like transformer, generators, alternators, motors, etc. etc. They have been catering to multiple end use industries and working with marquee clients across the segments. And some of the few of the marquee clients are likes of Hitachi Energy, Siemens Energy, GE Vernova, CG Power, Bharat Heavy Electricals Limited, and some of the global clients like Saudi Arabia Transformer Company, Georgia Transformer, etc. etc. Coming to the key details of the issue, so the IPO comprises of 420 crores of fresh equity and 290 crores of offer for sale. The price band is rupees 365 to 384 rupees per equity share, and the face value is 5 rupees per equity share. The offer is as per regulation 6(1) of SEBI ICDR, and the IPO is going to open on 16th of December, that is Tuesday, and going to close on 18th of December, that is Thursday. And the anchor is going to open on 15th of December.
Good afternoon everyone, and thank you for coming here. I'm Rajesh Hegde, the Managing Director of KSH, and today I'm joined by my 2 colleagues as well, Amod Joshi, who's our CFO, and Mr. Dhruv Chopra, who's our Head of Investor Relations as well. I'm going to just give you a short, brief presentation, a little bit about our background, what we do, and some snapshots on the financials, and then leave the floor open for any questions you might have. Okay. So, KSH International, we are a 45-year-old company, and what we do is basically we manufacture non-ferrous magnet winding wire. And what is magnet winding wire? It's a kind of wire and cable, but within the wire and cable family. But wire and cable normally is used on the outside. Winding wire goes inside any electric machine. Any coil that you see inside an electric machine, that's basically your magnet winding wire. And that's one of the most critical component in any electric machine and prone to failure as well. And typically in an electric machine, the cost of that overall component can be as high as 30% in a large power transformer, down to about say 10% in a small motor as well. And then of course, lastly, the EV adoption rate as of right now, it's about 10 to 12%, largely driven by EV two-wheelers. which requires round wires. But we expect, by 2030 there will be a 30% adoption rate, and that's more the market for the future. But we are developing those products right now and taking part in some programs with the traction motor manufacturers in India. And these programs will actually mature sometime in 27 onwards. So from a future perspective, the automotive growth story will also happen. And right now, of course, the T&D and the motors demand is what's driving it.
What small operational improvement in the past years was made to bring, to get a surprisingly big difference? My second question is, among all the segments that you have, which one is a sleeping giant for the investors to keep a watch?
Okay. So let me answer the first question. In terms of operational improvements, we have made a conscious shift that, to move towards more of ultra precision. As we are moving our products more for the higher kV segments, then we are investing in equipment also which is giving us better tolerances as opposed to our competitors. And that's going to enable us to really, keep that customer in our fold and give him a better product as well as, That's one operational efficiency that I can immediately tell you.
The other benefit of that is also the reduction in scrap.
Yeah. So the other focus is, that we have an inherent scrap in our process as well. So as we increase the ultra precision and better equipment, that reduces our scrap as well, and that adds. Any reduction in scrap is adding to your bottom line as well. I think the second question was, which is the sleeping giant? EV is definitely going to be the next big story for all our companies. Although right now immediately it's not, because it's quite a small portion of our business. But in India, they used to all import the traction motor before. Everything was imported in CKD condition, and they used to assemble it, and which is good. But now, if you see Tata Motors, Maruti, everybody is now setting up shop for manufacturing the motor itself, or some of the large motor manufacturers who are there around the globe are also setting up shop. We are taking part in those programs as well. But typically in automotive, what happens is you take part in a program, and once you have, your product has been specced into the product, the program will really start sometime in 26, 27 is when the program, the high volumes will really show up beyond 27. And EV, if I were to give you an example, a company like ours, in China, for us it's a natural progression because the kind of products we make are quite similar for transformers or for EV application. Complexity is slightly higher for EV, But in China, there are companies which make 50,000 tons of only EV products every year as well. And this is what is going to really play out maybe in the future, is what I'm trying to tell you.